Time to hear from some underwriters, and as we've done all evening, I'll get you to introduce yourselves, starting with you.
Hi everyone, my name is Patrick Gallic. I lead a business innovation group across Tokio Marine HCC. If you don't know Tokio Marine HCC, we're a specialty insurance carrier with like 150 products and 17 different companies, all with different names.
Georgie.
Hi, I'm Georgie Munger. I'm with Allianz. I lead casualty underwriting for middle market in the US.
Hi, Brad Craner from Zurich. I'm the head of underwriting design. And what I do is I try to make our underwriters' lives easier and simpler, and hopefully that translates to what our brokers and customers feel.
Well, thank you all three for joining us. So the task before us is to spend 20-25 minutes talking about how insurers are overcoming underwriting challenges in 2024. And then, Patrick, I'll start with you. What would you have near the top of your list of underwriting challenges, do you think? And then what role is technology playing in helping you solve those?
Yeah, so let's just start off by saying, like, what do underwriters do? So I think there's 5 things that underwriters do. First thing is they have to assess risk, then they have to price it, right? Then they have to figure out whether or not it's compliant. We talked about that before. Then they have to communicate it to a broker, right? And then they have to look at their overall portfolio. Like, that's basically what they have to do. And so if you ask an underwriter what do they want to do all day, that's what they want to do. The fact of the matter is, if you look at all like the surveys, they say 40% of the time underwriters spend is on administrative tasks. And so obviously that's a problem, right? And so we had talked before a little bit in the prep, but if you go back to the year 2001, we just got BlackBerries, everyone was excited, the digital revolution, everything was going to change, right? And you look at the change in the insurance between then and now, our operational expenses then are the exact same as now. And so you're like, what happened? We've spent all this time, all this money on digitizing this process, nothing changed. What did change is we're writing a lot more premium, right? So we've pretty much doubled what premium we're writing. And so the question becomes like, what are the challenges? The challenges is with all this generative AI, and we're going to talk about it later, like, are we actually going to get to a point where we're creating efficiencies and we're letting underwriters be underwriters? Because I think what we've done so far with the digital transformation is we said, we used to have an admin who was taking the facts and typing in everything and giving it to the underwriter who would go out to lunch and work on the deal. And now we're like, let's get rid of the admin, we're going to have email, and we're going to make the underwriter do all the work. And so I think the challenge here is, how do we take advantage of all this new technology to help with efficiencies? At the same time, let's not forget that we're writing double what we've written before because we have all sorts of great data and insights. And so we should talk about all the other great things that are going on.
This is a challenge I've received quite a lot, and I never quite know what the answer is. In other words, we spent all this money and then we haven't got quite the level of benefits in terms of operational efficiency. Does that create a problem? I think, staying with you, Patrick, what I mean by that is, have we not done it as well as we should have done? And then if we haven't, then what should the next stage of investment in technology for underwriting efficiency look like?
If you go back to the core, unlike our sisters over in the financial services, right, they adopted Swift. And so that made sense, right? And so they were able to take advantage of that. In insurance, we haven't. And so what we've done in the digitization is individual pockets, right? Like we get a lot of advantage from satellite imagery, from third-party data, from telematics, right? There's all these things that are really great that are being brought in. And we continue to invest, but we're not investing in sort of like a wholesale transformation. I think part of that is because, just to get a little geeky here, if you think about the computational power of the human brain and the underwriters, like if we look at these examples of the underwriters, they're not just looking at check boxes, right? Unless it's like parametric or something like that, check boxes and we're going to move forward. They're actually thinking about all these different scenarios and trying to figure it out. If you follow Moore's Law 2030, we're going to have computational power of the human brain. So maybe by 2030, we'll actually be able to do more with underwriters. But until then, I think what we're doing is we're just providing augmentation in individual pieces that will help them.
You call it whack-a-mole when we speak. Oh, I quite like that idea. Georgie, you've got an intriguing title, Head of Underwriting Practices.
It's made up, but yeah.
Is it? So what does a sort of head of underwriting practice do?
So it's a bit hard to explain. I'll tell a little bit of the history of my role. But when I came into Allianz in 2016, I was underwriting manager for a team in New York City. Pretty easy, pretty simple. What we realized when I came in, I was new. Allianz had a lot of legacy people who had been here for a very long time, very set in their ways. You give them a new tool, they won't use it. No matter what, they won't. And I came to realize that I didn't have peers across the country who were sharing best practices with each other. They were all doing things their own way. And then the underwriters on their teams were each doing things their own way. So we created at Allianz a head of underwriting practices. That was my role. I've got a couple people from my team here who are actually here today. They're taking pictures. Don't share that. And we tried to, again, it was a big talking tour and meeting the underwriters across the country and what are they doing that made sense, what things could we nudge them to stop doing. We had some underwriters, some late career underwriters who like the busy work. It's not everybody who hates it. Some of them like it. And when they're all, a multi-line package underwriter in the large middle market space, they're juggling 7 or 8 plates at the same time, any deal they're looking at. So sometimes when they're doing that manual labor of typing and thinking, they're multitasking through the account. Now conversely, we have our early career underwriters, and we're giving them all of these beautiful tools and analytics and information, and they think we gave them the answer. And both sides are wrong. Right? They both the late career and the early career underwriter might end up at the same landing place, but they're both wrong in how they got there. And we have our early career underwriters saying, how do you know that? And our late career underwriters saying, how do you not? And there's this over and under reliance on the changes and the efficiencies that we are gaining. I will tell you, as a portfolio steering, profitability, confidence in the health of our book, absolutely, we're in a much better place than we were 5 years ago or 10 years ago because of analytics, because of AI, because of the better tools we've got to analyze trends in portfolios and things like that. But when you're talking about the actual underwriter's desk on a day-to-day basis, it's a different story.
But you've got a job which basically says we have in this organisation some best practices, and you apply those to some notion of a typical underwriter, and yet those typical underwriters run a 40-year age gap, and they all look at the world. What do you actually do about that? I mean, do you find it's all about compromise? Is it something?
It is.
Yeah.
It is, and it's a lot of convincing. It's, late career underwriters need to pass their institutional knowledge down to the early career people, and that's not the easiest thing to do. I would venture to tell you that a lot of our tools and our innovations make that much easier than it used to be, but I mean, I'm old. How many in the room still remember underwriters holding on to dear life to their pro rata wheels? The day you took that pro rata wheel away, it was a bad day for everybody, right? And early career underwriters have no idea what I just said, and why would you ever need that? So it's an evolution. I will say, the other innovations that have happened because of changing technologies is our interactions with our other business functions, our interactions with claims, our interactions with loss control, our interactions with operations has changed.
Brad, turning to you, when it comes to underwriter challenges, there's a traditional way of dealing with this, which is just to blame the brokers. You say, I think there are a few Aoners in the room, but we're fine. We've got our own house in order, but and the brokers send us a load of old rubbish and data, and it's in lots of different formats. And can we blame it on the brokers or not?
No, I mean, listen, I think the brokers are in a tough position, right? I mean, I wouldn't place blame on them. I think it's just, you look at the challenge that they're faced with is they have a client or a customer, and they typically want multiple options, just like we all do when we purchase for anything. And every carrier has different requirements, different inputs, some rate bearing, some not rate bearing, some just I want because I want. So you have all this disparate information, but we do ask a broker, right? Or a broker picks one application, right? Is it from the current carrier? Is it their favorite? Is it the most simplistic to fill out so they will get the information back quicker? So it's sort of a quagmire, right? It's a little bit of a chicken and egg. So I don't think there's blame, right, to go around to anyone. I think it's the complexity of every carrier has a different appetite, a different rating model, and then therefore requires different pieces of information, right? So, I think that's the importance of having, and we've said it over, myself, but, all the panelists today, and I'm sure others in the audience, of being able to take, unstructured data and putting it into a structured format, I think is on the carrier side, right? And of course, brokers can help with that, right? You can set up APIs and things like that, but that costs money. And that only gets you so far when you have a partner carrier, right? Because if you have a partner carrier and you've got the most efficient process and, okay, they declined that risk. Now I have to go to another market. And I'm not set up the same way operationally with that market, and that's why we default back to sending an email to 50 different markets BCC'd, right? So I don't think there's blame to place. I think that's just the challenge, but it's also the opportunity.
Is it a challenge that ever goes away? What I mean by that, and I think this was also touched on earlier, are you all having to invest because for the rest of your lives as underwriters, you're going to receive a load of unstructured information from brokers, and that is just the reality of what you face? Or will there be an increased understanding over time that we need to be collectively more efficient and the brokers have a greater level of responsibility, do you think?
Yeah, I mean, like I said, I think for the foreseeable future, we're going to expect to receive massive amounts of data that's unstructured, and whether that's directly from our broker, whether that's from a customer, whether that's in the stratosphere, wherever you get it, right? It's like when you get it, it is unstructured, right? And then you have to structure it for your system. Like just because it's available in the public domain, it's not structured. It might be more easily to identify, but then again, going back to every carrier has their own platform, their own system. Maybe you find a piece of data that you believe in, and over time, you don't need to cleanse or augment it, and you can just take it and pull it right in, like a SEC filing, right? Like there's no need to, if I'm looking at a 10K or a 10Q, right? Like I don't need to cleanse that data. Like, if I do, then the public company has a problem, right? But then there's other pieces of data where you may find of what you believe an insurer does based on their website, right? And you can trust that, and you may be trusting that based on the size of the risk and the profile. Maybe it's SME business, but if it's a larger account, you might decide not to trust it because your capital deployment and your CAT coverage and all those things are different, right? So that just depends to me on what the individual carrier's appetite is at any one point in time, not just for the risk, but for when can we afford and what level of accuracy is acceptable to us based on that input for this risk profile, and on and on and on, and that decision tree starts to get really wide.
I'll say one quick thing to add. Somebody mentioned, I think it was you, talked about loss runs. I mean, as much as brokers are inconsistent in how they format data, we're worse, right? You look at 3 different sets of loss runs, and it might say property damage. It could be, I drove my car into your building. It could be, my product exploded in your home, and you have, to buy a new kitchen. Or it could be lightning struck the roof of your manufacturing facility, and different carriers all call that property damage. How many times have you seen a loss run that says for record only, total incurred $999,000, right? Like we're just as guilty as brokers are. So our formats of our data serve our purposes, but we're certainly not playing with each other to make it easier to ingest that kind of information.
You American underwriters are far more candid than London underwriters. In London, they're pretty, you won't find them admitting to anything very much. We're running through my list of, my sort of standard list of what I perceive to be the challenges, and increasingly one is too much data. Mm-hmm. So we have more and more sources of information, it's coming to you quicker. Is that, to what extent is that perceived as a problem, and then if so, how do you deal with it?
Yes, it's a problem. But I think it's a good problem, right? Like, I think if you want to have a problem, that's a good problem. So a couple things. One is the demo that Saitoro just did, that's a big deal. I don't know if everyone realized that. That's zero-shot prompting, Very different from this is what Gen AI, and this is where I get excited, right? I don't think there's anyone more excited than me about the whole Gen AI stuff. But what it's really good at doing is summarization. And so we're piloting, just like everyone else, actually with Google, on some of the summarizations where you can look at large documents and you can create a summarization for our underwriters to look at and say, hey, this is something really important. Let me go to the source and actually look at it, right? Being able to summarize that data and actually distill insights from the data is where the magic is going to happen. Generative AI is really good at summarizing what you want to be summarized and understanding zero shot much better than traditional AI. And so what I mean by that is like you could take a medical form, and I actually did this. I had a medical bill I was disputing, and I took a snapshot of it with ChatGPT. Sorry, it wasn't Gemini. And I said, what are the discrepancies in this bill? And it was a newborn child who was born. And I said, hey, this vaccine was given should be given at 3 months. Why are you being charged for it at the time of birth? There's something wrong here. I went, okay, great, I'm going to dispute this, right? That's something that is zero shot sort of on data. So if you have lots of data with these new tools, you can make use of it.
Now we're talking about solutions, not problems. I don't think we've heard the word underwriter workbench once this afternoon, which is very rare in a discussion about sorting out underwriter challenges. Presumably they have a role to play, and if so, what role? And I'm interested in your views. Brad, starting with you.
With me?
No, Brad.
Okay.
So the role of what? Can you repeat that? Sorry.
Of underwriter workbenches in this.
Yeah, I mean it's tough, right? I mean I think the way that I think that's like there's the human element, and that's where it comes in, right? Where it's like every underwriter goes about their sort of day and operations differently. And I think when we talked about, and it's been said over and over, like standardizing, right? It's standardizing data, but to the ability that we can sort of standardize the way an underwriter consumes that data, I think that that's helpful, right? I know you'll have some individuals who say, first thing I'm going to do is I'm going to look at the loss runs. First thing I'm going to do is I'm going to look at the deal structure. First thing I'm going to do is I'm going to say, what broker is this? What's my level of success to even close this deal? I'm not even going to look at it first because it might not be something. So I think when you look at the actual workbench aspect of it and like how they just manage their day, this is our ability to sort of help and define how they go about and what their cadence is and the way in which we surface information, right? So I think that's the ability. If we can sort of standardize the information, then as an underwriter, you can then decide, I want to look at this first or that first, but at an organization, you might say, here's sort of the order of operations or the cadence that we want you to go through to make your decision. We think that that's going to help you sort of be more effective.
Have either of you got underwriter workbenches? Money being spent in it?
Yeah, we have lots.
Mm-hmm.
Lots.
Yes, we do too.
Very, very encouraging for you vendors. They buy lots of these things. Now, there's lots and lots about submissions, and then I've hardly heard a thing about renewals. Georgeanna, I know that's a thing for you. All this money is being spent on making underwriters more efficient when they're looking at the risk for the first time.
Yeah.
You've got a
Well, I mean,
good
to
point.
Brad's point, right? So if you're talking about efficiencies on new business, our most successful new business underwriters do it in their heads, right? They're analyzing the quality of the risk. Does it meet the objectives of balancing our portfolio among products, among geography, among industries? They just know this in their heads. They know their brokers intimately. They know when they've got a viable opportunity or not. They don't need tools to do that. It's on the renewal side, no account is perfect. So on the renewal portfolio side, that's a much larger percentage of the book of business, always, unless you're in rapid growth mode, and that's a different animal. You need to have consistency in your data. You need to have predictive analytics. You need to have technical pricing developments, and you need your renewal underwriting teams, whether it's the same person or a different person from your new business people, to trust the data, to act upon it, and to continually work to improve the quality of the portfolio.
Got it.
It's an opposite.
Yeah. It is. I mean, I think you made the observation is a good one, which is just all this money is being spent, but make yourself better at renewals. I mean, it's it's a big part of your book. We've been lots of talk about AI. Let's throw that around. Let's get an underwriter's perspective. on AI. I know that all of you are quite excited about it. Brad, let's start with you. Where do you think it's going to have the biggest role in terms of sorting out these challenges for underwriters? I mean, it's got lots of applications, but what do you get most excited about?
Yeah, I mean, I think there's sort of two areas, I don't want to say low-hanging fruit, but I think are less complex than sort of others, sort of that, and we've talked about it today, so that upfront triage process of just help me identify what I should be focused on, and I don't have to figure out everything, but like there's enough elements here, opportunity. There's enough elements here, probably not opportunity. And then when you overlay that with any sort of risk summarization, right, then that's going to help the underwriter if they decide to quote it, because everyone has to create a narrative, right? And we've all, if anyone who's an underwriter in the room will pick up a renewal file and be like, what happened? There is nothing here, and then you have to sort of backtrack. So I think that that's helpful. Where I also think it's helpful in a weird way is sort of like when you're declining it, when you don't want it, right? Because to me, it's much more powerful to go, because we're all busy, right? And you go back to an underwriter and say, hey, here's the structure of the deal. You know, can you do it, yes or no? And you look at it and you're like, no, I can't do a 5 million limit with this retention and I'm busy, so I say no. But if I have the risk summarized and it tells me what's good about it and what's bad about it, I may go back to the broker and say, no, I can't do this, but based on the information I have, I can actually do that. And maybe it's an excess layer, maybe it's a shortened limit, it doesn't matter. But I think if you go back to your broker with, or if we can go back to our brokers with more clarity on our decision, good or bad, there's going to be a belief that we sort of care more about the account, we spent more time in it, and I know brokers like a quick decline, but a quick decline that just says out of appetite, that doesn't fly anymore. But out of appetite for this very number of reasons, now I'm actually helping the broker for them to go to other markets or back to their client and say, hey, listen, this is the list of things that all these carriers don't like. Maybe it's a risk engineering opportunity then, right? Like there's a lot of other things that carrier can then do to sort of provide value beyond just a decline. There's other ways to sort of generate that, goodwill and relationship.
So you two are getting off piste here, just to warn you, this is unprepared territory. There's been talk earlier about truly automated underwriting and then augmented underwriting. My personal view of that is everybody uses the word augmented to mean don't worry, your job is safe, in order to buy a certain cultural engagement with the underwriters. And at the moment you say this is going to be fully automated one day, they all turn off and fight a long and turgid rearguard action. Is that right? And if so, how is your organisation dealing with it? In other words, AI is going to profoundly change their jobs, but you actually therefore have a diplomatic issue to deal with as you roll that out.
So let me give a little more of a nuanced answer to this, right? Because there can be all sorts of risks. But let me say this about AI. I think in terms of the whack-a-mole and the we're going to straight through. I think we're going to do on the current version of generative AI. It's a whack-a-mole. We're going to get these little efficiencies here and there. And we're going to, it's great, we can summarize, we can do that. And for us to truly get that, this next generation of AI is going to solve for it because there's 3 things that we don't have currently. It can't reason and understand, it can't plan, and it doesn't have any short-term or persistent memory. Those 3 things are critical for us to actually make a transformational change in underwriting. What gives me hope is that NVIDIA's sales, if you saw, they're like a $3 trillion company, 60% of their GPUs are being used to train the new models. And so what I think is that in the next 2 to 3 years, we're going to have a very different conversation because the skills are actually going to be there. Until then, I think this current version is going to be exciting to get little things here and there. But also, at TMHCC, we're never going full getting rid of underwriters. It's not going to happen.
No. Anything to add, Georgie?
Well, I mean, for us, like in the middle market space, it's still a people business.
Yeah.
So no matter how perfect the AI and the tools and the data could be, it's still a people business. So, our underwriters aren't going anywhere.
No, we're not going anywhere.
For sure. But I think we are dinosaurs, this industry, in a lot of respects, and how, again, back to the day-to-day underwriters and how they operate each and every day. It's going to take a little bit more time to get them through their, they work on 1-year renewal cycles. I give them a brand new tool today, it doesn't hit their account for a year.
Can I just make one
Please
comment
do.
about that? I think we all need to congratulate ourselves a little bit, though, because like 3 years ago, I remember I was talking about Salesforce being like innovative, right? and we're like, oh, we have CRM. Like we're talking about we use AS400, right? But somehow generative AI has been around for like a year and 3 months, and we all feel like we have FOMO. Like, man, how come we don't have this at scale and implemented, right? Like we need to be charging into this. A little, round of applause for ourselves for like being self-conscious in this area. So anyway.
But Brad, I'm conscious.
Yeah.
I'm conscious you haven't contributed on that subject, but it was one of your pet subjects. Anything you'd like to add?
Yeah, no, I mean, the only thing is that there's an art and a science, right? And, I think the science part, in large part, AI can figure out, and the art of how am I structuring this deal, when am I reaching out for a client meeting, sometimes I have to quote this layer that I don't want to get that layer. Like all of that will take a very long time, if at all, for AI to play a part. But I think what AI will do is give the underwriter more time to put thought into how they do it, right? Sure. So it's repurposing that underwriter's time. Yes, it's saving them time, but it's also repurposing that time for, it could be a stewardship meeting, but how they're actually going to structure the deal and thinking about that a little bit more. I think that's an area that, could be expanded upon, so.
Good way to finish. We haven't got time for questions. I hope you'll stay in the bar and we can talk to you later. Thank you for joining me and thank you for being so candid.
Thank you.